Boom! Let's begin. So the first one is euro dollar. So this currency pair, it's looking interesting because if you look at the daily time frame, you see we have a very obvious head and shoulders pattern on this time frame. So here's the thing about trading classical charts of the daily time frame is that your stop loss, right, is usually pretty darn wide. If you think about this, right, if you were to short the break of the neckline and you put your stop loss above the head over here, that's easily like what, 500-600 pips. So this is why you don't see me trading off the chart patterns on the daily time frame. I mean, you don't see me trading, having the entries and exits based on classical charting patterns on the daily time frame, because your stop loss can really get pretty wide. So what I do instead is I use the daily time frame to have a bias to where price could potentially go. So for example, this euro dollar, if you ask me, right, I would say there's a good chance it could retest this level here, somewhere around the 115 level, the previous minor resistance turn support, or maybe even towards this 113 level, either this or this. So with that said, I have a bias towards the downside, and how I go about trading it is, I could just go down to the 4-hour time frame, and this is what I see. I see that the euro dollar has basically broken out or broken down of this range. So for those of you, right, you have been following me now, is that you always want to have a plan of attack, or rather, a plan to enter the trade. Different plans for different scenarios that the market could come up with. So the first one is, again, a very straightforward pullback towards previous support, turn resistance, right, where you can look for an entry trigger at this area to go short towards the downside. Another one, which is usually the more likely scenario, is that the market does somewhat like a bearish flag pattern. So you have a very weak pullback, and then the market continue trading lower, breaking down from this pullback, this flag pattern. Or the third scenario is the market could go into a new range, a minor range like this, and this will be a new high, a new swing high that you can look for shorting opportunities towards the downside. So these are the three most likely scenario, and of course you have variations, to these three different potential trading setups. But the core idea is pretty much this, right? What I've just shared with you, and this is the plan I have for euro dollar in the coming week. Another market that is worth looking at is a dollar yen. So dollar yen, you can see that price has actually come into this area of a resistance over here. Okay, this high, and then it got rejected. So I'm not keen to short this, because if you look at the move coming up higher, there is somewhat of a build-up form over here. Okay, so if you were to go short, right, you can expect potential selling pressure coming at this area over here, which on a 4-hour time frame, it's clearer over here. So I'm sure, right, there will be traders who are short, right, because on the daily time frame, there is a bearish shooting star, right, stop loss above this high, go short on the next candle open. Okay, but what I prefer to do instead is to go down to the 4-hour time frame and to trade against this group of trader. And how I go about doing it is that on a 4-hour time frame, I notice that there is this previous resistance, turn support. So I'm not going to go long immediately just to go against them for the sake of going them. I'm not contrarian in that sense. I have a plan, and if the trade develop in a way that I anticipate, okay, I'll just follow my plan. So this is the level I'm looking at, this area of support, the 113.20 level. So if it comes down lower and does a false break, or price get rejected strongly and closes somewhat like this, right, I'll be looking to go long in anticipation that the price would retest back this swing high and eventually break out of this mini range. So this is, in a sense, right, I'm going against the traders on the daily time frame who are shorting based on this shooting star. Okay, so this is the dollar yen. So we'll see how this plays out. And the last one that I think is worth talking about is Euro New Zealand. So Euro New Zealand, right, just see the big picture, you can see that it's bullish compared to Euro dollar, right? Euro New Zealand is much more bullish. You can see that it rallied quite a bit back into this area of resistance. So with that said, right, if you go down to the 4-hour time frame again, right, this will be a level that you want to be paying attention to, right? This previous resistance turn support, right? So it has quite a strong sell-off coming into this level. So again, you can look for a price rejection right before taking a long setup, and to see whether you can retest back this swing high over here. So this is for Euro New Zealand. And just one last one, a quick one. I think Euro Yen is having something similar, but the magnitude of the sell down is much larger. So Euro Yen, you can see that on the daily, it's somewhat in the range between the 134 and the 132 level, right? So this is the range here. And over the last couple of days, you have a very strong sell-off. So usually when you get such a strong sell-off, right, the reversal back in the opposite direction could be just as swift. So where you can get an entry again is on a 4-hour time frame. You would see that this is an area of support, right? And price coming in. So again, very straightforward. You can look for a strong price rejection before getting along on this particular currency pair. So yep, this is it, right? Pretty straightforward trading setups for this coming week. So with that said, right, before I end off today's video, I just want to talk about one thing, right? Is that I'm not sure if you have come across materials online where they tell you that you can make a consistent full-time income, right, by trading off the daily time frames, taking maybe 3 to 4 trades a month. And my answer to you is that is simply BS, right? That is not going to happen, right? You're not going to make a full-time consistent income each month, right, by taking 3-4 trades a month. Why is that? And the reason is simple. Is because of the law of large number. Right, the law of large number, if you're not sure what it is, right, a brief understanding is that it basically states that you need to have a larger sample size for your edge to play out. That means even if you have an edge in the markets, you need to have a large sample size for your edge to play out. So for example, you can talk about the casino. Right, their edge over the player is about 52% to 48%. So if you play, say, a game of roulette, okay, there's a good chance, right, that you can actually, win the casino in the short term. Why? Because the sample size is not large enough. So for example, let's say, you think about this, a casino. Do they say in a month, they only, play 4 or 5 rounds of bet? Do they do that? No, right? Each day, the casino have thousands and thousands of bets. And if you accumulate to a month, they easily have, hundreds of thousands of bet each month. Why is that? Well, because the casino clearly knows that for their edge to play out, they need to have a large sample size. And it's the same for trading. Right? If you're only going to have 3-4 trades a month, there's a good chance that you're not going to make money that month because your edge hasn't been played out. All right, are you with me? So I would say manage your expectations accordingly. I'm not saying trading off the daily time frame is wrong, but if you were to be trading off the daily time frame and you're expecting to make money every month, then you need to set your expectations right, because that is not going to happen. Okay, so 2 things you can do about it. Number 1, you can just simply manage your expectations, right? If you're trading off the daily time frame, right, instead of looking to make money every month, you can look at it in terms of looking to make money every quarter or every year. Okay, so the pressure is not there to make money every month. Number 2, if you still insist that you want to make consistent income every month, then you probably have to change your time frame, right? The daily time frame is not something that you can work with, right? You probably have to be a day trader, maybe even a scalper, so you can get a consistency within a shorter period of time. Why is that? Because as you're trading down the lower time frame, you have more frequency of trades, and your edge can be played out in a shorter time period. Okay, so I think this is important, right? This kind of myth that has been surrounding this trading industry, where you can make a full-time income with a daily time frame, taking 3 or 4 trades a month. And I just want to say that it's not going to happen simply because of the law of large number, LOL, right? The law of large number. If you're not sure, you can go down to my website, just Google, search something like profitable trader. I wrote an article on it explaining the law of large number. Okay, so with that said, let's do a recap to what we have covered today. Number 1, I mentioned the euro dollar, looking for short setups towards the downside. Dollar yen, bullish. The third one is the euro New Zealand, right? Bullish as well. Based on the 4-hour trading setups. Then last but not least, we spoke about the law of large number, on how actually that the daily time frame, right, it's not realistic to make money every month trading off the daily time frame if you only have like 3 to 4 trades a month, right, because of the law of large number. So with that said, right, I wish you good luck and good trading, and I'll talk to you soon.